Hello, and welcome to this final edition of the series of Sionic's Fraud Talks. My name is Gareth Evans. I'm Head of Fraud with the Financial Crime and Compliance Practice at Sionic. For those of you who might not be new to Sionic, we're a specialist consulting organisation based in the UK, Europe and the United States. We work with many of the world's leading banks and financial services organisations to deliver technology and process improvements across a range of business areas. Some housekeeping today. Before we begin, the session is being recorded and will be made available for those who wish to listen again or who are not able to join us in person today. We will send you details of how to access the recording after the session. There is also a questions and answers session towards the end of this discussion. Please feel free to submit your questions to either myself or today's guest via the Q&A tab during the webinar. Today we'll be discussing the challenges we face in the financial crime landscape and how machine learning is assisting in the fight in fraud and money laundering with guest Lukayn Hunsicker from Feedzai. Lukayn Hunsicker is the Vice President of Financial Services Product Management for Feedzai, residing in Miami Beach, Florida. He serves as subject matter expert in the areas of financial crime and risk, creating and delivering solution value for Feedzai's diverse customer base. He has over 17 years of experience in the global financial services and software industry. In addition, he has held advisory roles pertaining to cybersecurity, cyber-enabled crime, and risk. So I've previously worked with Lukayn and we remain good friends. However,
good to see you again, mate. Yeah, absolutely. Questionable. Yeah.
Exactly. We haven't actually met up for a beer for a long time, and it's actually far too long a time. So it's going to be good to speak to you today, but I'm looking forward to when we can write that and sit over a cold beer and have this discussion in person.
Yeah, looking forward to the pub sessions again. And thank you very much for having me. It's a pleasure to be here. Good to do this virtually and share a little sunshine behind me with my real Zoom background.
I was going to say, it doesn't look that sunny today.
No. So you're sending a little bit of your weather our way, so we'll take it. We'll take it from time to time. No worries.
Sure. So in previous fraud talks, we discussed behavioral profiling, transaction monitoring, and these are available on the website. So if you weren't at those events, you can listen back. So today we're going to build on those discussions and explore further some of the elements of AI in particular and related topics. So, Lukayn, let's go straight into it.
All right.
So we've spoken a lot this year, usually through WhatsApp or Zoom chats. And we've discussed quite a few of the observable increase in fraud typologies across the whole spectrum of financial crime. Not to go on about COVID too much, it seems as if all we've talked about this year is COVID. But do you believe that most of the digital-based events that we're seeing is COVID-related, or there are other factors in play?
So I think it's one of those areas where the answer is both yes and no, and I'll explain this a little bit more. In and of the fact that I think the evidence will show when we are able to get some more look-back period data beyond the 6 months or so we've been dealing with, but I think the rush and the push to digital-based transactions in light of this event exacerbated an existing issue, which is the rush to create and enact a digital omni-channel experience for a lot of traditional institutions has meant a significant amount of investment into their data management policies, being able to present that user data in a usable format, meaning that as I'm going from my mobile to calling into the call center to doing an online banking transaction, I almost want that same ease throughout all of those interactions. So part of that desire to have that lack of friction in these trying times has also led to absolutely more fraud. These are through, I would say, the traditional social manipulation, the unfortunate desperation that comes around in trying times in economics. People will tend to fall for more, you could say, good news type of scams. We've certainly seen no shortage of the government fund scams, so we'll go into that more later. But I think they do go hand in hand. I think one, you have an industry that had recognized for some time that they needed to make this experience more pleasurable and secure, and kind of bridge some of the gaps between traditional core banking systems and today's demands for authentication and identity proofing and items of that nature. But like anything, it's twofold in showing that this can be done in a nimble way. Some of the more digital first challenger type of banks may not have had that same type of you could say initial performance issues. Now, authentication and the CDD due diligence, that's another piece we'll touch on. But I think one hand feeds the other. I think it's simply peeled back the curtain a little bit more on something that's been brewing for a long time. But it will also force what I'm considering a once in a generational change in the way banking behaviors are performed. And I expect a lot of this to carry over post this, you could say, pandemic.
Yeah, I agree. I think it's it's been there for a while. It's just brought it to a head, and I think that's going to make, like you say, the next few years quite interesting to see how it evolves.
Well, yeah, and I would be very keen to understand through this. I mean, was the expectation, especially from the consumer side, right? As I'm not allowed to go into the branch, I'm not allowed to have that interaction if may have been in the middle of refinancing, for example, and trying to take care of these, at least, for example, the mortgage rates are historically low. How do I accommodate that in states, and at least in the U.S., where I have to physically be there and have wet ink on my signature, as an example? So it's a lot of these things that are coming together in one fell swoop. And unfortunately, like any event with confusion, there are nefarious actors that will take advantage of that confusion.
Yeah, and you know, I think I mean, I look at myself as an example. You know, I've been kind of living this life on a treadmill for the last 6 or 7 years, flying here, there, and everywhere, and doing work all the time. And the finances have been kind of in the background for good or bad, mostly bad.
Right.
But that's life. And you know, they just kind of, you know, including things like pensions and investments and all of those things have just been kind of ticking along in the background without really paying any attention. And then suddenly you've kind of been locked down, not going anywhere, not sort of being able to leave the house even sort of, you know, other than sort of an hour's walk in the day. And so I've, you know, taken on all those roles that I haven't looked at for years. You know, I've got sort of black bin bags full of old paperwork and things that I've kind of gone through. And I've started sort of collecting together all of my pension information, all my investment information, bring everything together. So, you know, I'm going online for the first time for a lot of these organizations I would never have kind of thought of, and actually kind of getting to grips with my finances. And I think that kind of behavior then is exasperating the challenge for a lot of these institutions, because there's a lot of genuine people doing genuine things that look suspicious because it's not been done before. So I think it's kind of many factors coming into it.
Yeah, and it can be confusing as well, right? So we're also seeing servicing being transferred, right? So one, to handle that influx. When I say servicing of your either your pension or your mortgage or you know, credit card debt, etc. Under the scenes and behind the scenes, if your organization might have to work with another institution to handle this backlog of requests that are coming in. That's certainly something that we're hearing. And I think you actually just raised a really interesting point, because that would be one of the, you could say, typologies and fraud schemes, I would imagine, that has been going on in greater effect, which is the proactive outreach, right? So the social engineering of people who, oh, I meant to get to this anyway. I'm glad my institution is reaching out. So people who maybe not have had that time to kind of connect that dots between that paper world and what they need to do today are certainly vulnerable in our population. And this is common, right? So we see that with pensioners, we see that with the romance scams, etc. So I think it really is one of those unfortunate perfect storms of uncertainty, a lot of economic money flow internationally, and not a lot of clear guidance on where some of the good funds are actually coming from.
Yeah, sure. And I guess on that point, things like tax fraud and pension fraud, and a lot of these different fraud types. I think we're all kind of attuned to keep checking our credit card statement and looking at our bank accounts, but don't always see other things. I know, my partner Vicky's had at least half a dozen different messages from HMRC over the last 6 months. Fortunately, I've trained her enough to run them past me first. HMRC don't check with a link to make a payment.
But when was the last time they were proactive about it, right? So yeah. Exactly. I see that. I'll start with the United States because that's where I live, and then we can push that out a bit further. So, there's an aspect to this, at least through our program here, which is since due to the pandemic, the tax return deadline was extended out to a number of months here in the US, right? So there has been an ongoing issue, a cat and mouse game of identity theft, thieves filing tax returns prior to the good taxpayer actually doing this, and then essentially receiving a prepaid debit card with a certain amount of funds on it. Now, the example you gave about proactively tying and stitching your finances together, I think this is another example of where there are likely going to be a few nasty surprises around this time with people who went to file only to find out during this bonanza of time the identity thieves have been going rampant. And that's certainly something where the technology we're here to talk about today can assist, which is getting in front of that transaction and looking for the type of indicators depending on who's filing it and how. Is it a paper one? Is it digital, et cetera? And we can dive into that a little bit more. But I see this as a rising tsunami that's going to continue here for quite some time as well. Is the tax into identity fraud? Absolutely.
Yeah, I think identity fraud is quite key as well. So to get us back on track, because diverted quite dramatically from where we started with our plan. So where do we go from here? What's the way of combating this? Because clearly we've had traditional fraud detection in place now for a number of years. But the increase in fraud suggests that either it's outdated or less effective, or it's just as effective, but it's dealing with larger volumes. So where do we go from here? How do we look at, say, advanced analytics, to use the broad term encompassing learning, AI, big data, etc. Where does it sit within the industry, and how do we go?
Yeah. So I think we can paint this out very broadly, right? So as we use the term advanced analytics, so we could start back in the early 2000s, late 90s with the card neural networks that were built around that time, right? So heuristic behaviors, how am I compared to my peers and my outliers? How do I act against the population size within this card portfolio, et cetera? And that's evolved over the years. One, as card use grew and was adopted more, obviously this created more digital-based touch points, both from within the card networks and point of sale systems, issuers, acquirers, et cetera. There was that whole ecosystem that was growing and creating an ever-growing number of different digital events within this ecosystem, right? So then you had the evolution of EMV. Globally, you had tap, contactless, all of them increasingly secure in their evolution of how to transact, but also again creating more noise within this digital landscape. And this is where the analytics technologies have really shown they can help, and we can speak some more about where they're perhaps could use some more guidance. I would say your last statement is probably true. There's some effectiveness there that's simply reflected in the growing number of digital volumes, but there is a more efficient way to do these things. And so as this ecosystem grew, and as we're starting to see this more, the increase in online banking, this once in a lifetime generational change, et cetera, the underpinning technology that makes the monitoring of these events easier is exactly this. It is machine learning. And before, yes, this was achievable. It was probably a lot more expensive, you could say, in the mainframe type of database days, relational database days. So this kept the cost to innovation relatively high. Now with some of the open source big data technology that you can just test absolute vast amounts of information to look for and create new types of algorithms, I think is really, really assisting with this. And I'll pause for a moment, because being able to process that much information in a timely fashion where you can actually get actionable intelligence out of it, I think is the key to what we're talking about. And a lot of times, you know, as someone who's been in this industry for a long time as well, is we knew something was there. We just couldn't necessarily prove it because either the data set was too large and we lost the forest for the trees, or we just didn't have the time of our analytics resources in the fraud shop we were working in. And then to continue, the proliferation of mobile and the use of, I would say, going to mobile first is, of course, a double-edged sword, meaning, again, tons more digital noise, a lot more items to review. But you can, now that we're able to process this information at speed and not impact the user journey, or if we do, we have the same mobile device to reach out to them to try to remediate this and move them on. And what we're seeing is in this space, when we're having conversations in our compliance or risk or whatever risk operation that we're discussing with, is a lot of there's been so much noise in this space over the last few years. A lot of the conversations come down to, it's almost like a prove it mindset. Like everyone, great guys, everybody's talking about the same thing, but really, where is this in production? How is it giving you a lift? How much do you have to touch this? Those are the type of questionings that we're facing in the industry, along with how do we assist our partners get through their risk model governance oversight as well. And I don't say get through in a bad way. It's a two-way street to learn, and it's a proper guide. But how do we communicate what we're trying to do and what will happen? And can I explain this enough to my board or to my auditor or to my regulator in region?
Yeah, and I think that explainability is key. I also think that a lot of the time we lose the point of what we're trying to do, in that you sometimes get down the rabbit hole of trying to prove something or identify something, that you lose the big picture of what you're actually trying to do. Whereas when you are working fraud cases and you are on the front line and you are dealing with customers, you know, your priority number one is make sure that my good customers are not impacted, so you get them out the door. Then it's let's deal with all of those customers who have called us up because some money's gone from their accounts, and let's get those under control. And that's sort of usually fighting against the tide. And then you've kind of got let's look at how we kind of refine our models and things. And a lot of the time, the kind of the theoretical, let's do this sort of really complex deep learning, look for this sort of once in a kind of in a million example of something which is kind of we wouldn't have had before, just doesn't get into your day job because you're just too busy. So I think a lot of the time machine learning and AI in particular has been seen as this kind of silver bullet, but hasn't necessarily always been thought out about what you're trying to achieve and where does it fit into my day job or my operation that actually makes my life easier and improves things for my customers.
Absolutely. Absolutely. And we see that, right? So I think you hit the nail on the head. I mean, there's a lot of talk about it, but when it comes down to the end of the day, you know, models and their output are not magic. They're not a silver bullet. You need that guidance, right? A bullet will go anywhere that you point it. So you need that guiding hand. And speaking broadly, in my experience, I would say over the past 5 to 7 years, this has really come to the forefront in planning and having a seat at the table has been, there's 3 distinct personalities that you'll need in any one of these type of projects. And this speaks across whatever the output is that you're trying to come to. So you look at that, what's the job to be done here, right? So you mentioned all of the items that go into running an FIU, right? There's all the clock timers, there's the adverse actions, there's the actual timings of when we're actually able to do these things before our batch process closes and we're racing against the clock, like you're saying. to encapsulate all that, so you need someone who's lived that, right? So we need that domain expertise and that business understanding of this step leads to this, outside of a data schema, right?
Yeah.
And then in addition to that, what we found is having a data engineer, not necessarily the term a data scientist, but a data engineer who can go in and really understand what's in this data repository, help you create featureized, searchable information out of it. So, and help you with that wrangling and that cleanup and everything else. And then you have the third persona, which is the data scientist, who come in and really do work those either existing algorithms or build their own, and work together to really come to that best desirable output, I would say, in the most, well, what I would call a robust operational fashion. So is this something that we can truly operate, or is this something that we will have to handhold constantly? And now we know it's too brittle to put in production, for example. So that helps, what I would say, avoid some of the gotchas, which is, I'm sure everyone has no shortage of horror stories, but sometimes the output and the outcome of a model may seem excellent until you really dig into that one specific feature or field that's creating that off balance in your curves.
Yeah, and I guess that's touching on model bias and some of those terms that you hear going out there quite a lot. And I guess also, because obviously what you described, those three, everybody's looking for that one individual who can do all three roles.
Right.
Hunting, as we call it, in kind of recruitment, where you kind of, you get asked to provide somebody who fits into all of those categories, and there just are so few of them that it's quite difficult. So you do have to mix and match, and we've seen the rise of the so-called citizen data scientist, where
absolutely.
How do you deal with that?
Yeah, I think to find somebody who works in the financial crime risk operations space and is a data scientist, we call them, they're like their own unicorn startup almost. So if anybody's watching this, go study, kids. You can go own this market very quickly.
Yeah, and send us a CV.
Yeah, exactly. It's some of your CV. No, so in short, yeah. So I would say this is something it's gone from, this is a much pursued skill set, very high demand. Obviously, keeping, retaining, and training talent can be a challenge depending on the organization. And some have made the move to, I would say, almost dominate and hire out the market as well. And you've seen that happen as well. But I think the key here is when we're talking about a citizen data scientist or someone who has a working understanding of how analytics could be applied to a solution or a problem set, I guess you could say, and look for a specific solution. So empowering users who have a working understanding of analytics, who can massage some data and come to a conclusion and put it in a user experience that is easy to use versus trying to load a bunch of scripts into a notebook or things like that, I found helpful, meaning that it empowers the business user with the tools in the more complicated analytics shops, but as long as you give them the understanding of how to use that. So yeah, I would say that I've seen investment in across the industry to make this more appealing to the user, and not just like I had mentioned. Firstly, it's not just to the pure data science persona. It's also to the risk strategy operationalist, or the AML officer who's responsible for threshold tunings on an ongoing basis, or items of that nature that really make the teams function a lot more efficiently within, I would say, the analyst and user community. Because ultimately, speaking from the vendor side, we're empowering our clients and our customers to hit, you could say, to find those impacted parties that much faster and try to keep that journey going on as well, right? So we're trying to enable our users to make that as smooth as possible.
Okay, so as a vendor, what are you seeing in the market at the moment in terms of what are your customers' pain points, and what are you kind of being most, what's the word, approached about? What's that kind of
Sure.
that you're seeing?
Market, yeah, sure. So actually, this is very, very timely because we were able to get a panel of data science users together yesterday, and you know the insight was it was very interesting. So, surprisingly, and this could have been the sample size. It was a really educational conversation. I had mentioned model risk governance before, because we've heard in the industry quite some bit that you know, complete transparency is necessary or white. So, but in our world, we would call this like a white box decision engine. What are my analytics doing? What's happening? Why? You had mentioned the bias piece earlier. Are my models inadvertently affecting peoples of color in a disparate way, or specific sexes or specific areas? I mean, anything that's in violation of a regulatory cause, but also even though these models may be quote unquote right, just based on what they're built on, the output is not something that we as a financial organization would find desirable, either from a sociological or economical way. Yeah. But and that's really, really key. We heard back though that the governance process has gotten almost educational, where it's a two-sided street, and in some shops. And I think that empowering the personas across the board, either from, you could say, a data science user to a BSA officer or others, I kept hearing transparency and audibility, right? So that's something I think is continuing to shape in the marketplace. I wouldn't go as far as saying the audibility needs to hit the point of some of the regulatory retention yet, but that was certainly something. A lot of interest around how do we make the actions that our systems are presenting to the users more clear, meaning I can show you a score, I could show you a graph or a tracking of things, but what if I said this happened because of this, and if this happens, this is even worse? So it's priming the user as they read what's happening to take an action. So a lot of we can call it natural language processing, explainers, etc. But that really helps in an FIU shop. And from a business standpoint, if you can make a decision faster with more accuracy, one, that's overall a benefit to the organization as a cost savings, but also in time, this will actually feed back into your models and create a better and more accurate view. And then lastly, and this buttons to the original topic, which is the dirge of new digital-based transactions, is how do data scientists address a mislabeling issue in their data set? So I'm sure we've all experienced this as a business sponsor, as probably at some point, where we went in with the mindset of a conclusion we wanted to reach, but we quickly realized that the data we had didn't have enough labeling, or there's a huge feature disparity or something. How to address that when they have large data sets that they just simply can't use with some sort of outlier, was part of the dominating conversation as well.
Okay, I mean, you mentioned quite a bit there about the explainability. Are you finding, I mean, obviously AML is very different to fraud in terms of regulatory requirement.
Right.
Are you finding that when it comes to AI and ML, that AML and fraud are actually kind of going on the same path and quite similar, or are they diverging quite a bit because there isn't that same regulatory pressure on fraud investigation as there is on an AML investigation?
I would say, yeah, so I would say at a certain point, they're diverging quite a bit. I mean, it's being talked about in AML as a flashpoint because it is new, right? As mentioned, fraud's been using advanced analytics and they don't have, to your point, the same type of regulatory requirements. Yeah. I'll split these up for a couple minutes. So let me start with fraud. Where I would see fraud in this divergence happening is, you know, advanced analytics have been used for quite some time. How do we take what we know from those findings and apply them to today's world, which to me means having the ability within your analytics and decision risk engines to orchestrate and kind of pick up different pieces of risk or risk signals across the journey within your organization. Now, everyone knows that you know, they have a lot of disparate systems to work with. You might have multiple vendors as an FIU manager, for example. But the key factor there would be take the best of what each one of those has to offer and combine that for an entity-based, you could say, golden profile risk score of that user. And I would say apply step-up authentication judiciously in those higher risk situations where your transaction risk analysis and other items have failed. To me, that's the advancements of AI and machine learning and fraud, is the ability to do all of everything I just mentioned in less than a few seconds and still be able to reach the impacted party through an app push. It's still incredible to me, coming from someone who ran batch card shops back in the day. But the other thing on the fraud and AML side is, there's applicability there. And we talked about the explainers, right? So if you are an AML analyst in a shop, and let's say 9 out of 10 of your alerts that you're reviewing are just simply false positives, right? Or even higher. So you are just constantly churning through noise all day long. That raises the false negative aspects and things like that as well, and other regulatory items as you're just churning through. But if you can explain what they're looking for in a plain way, that pops out at the stage or the screen more than just a score and a name per se. But there's also as I mentioned, the volumes are quite high there, and they require a human being, right, to look at these. In fraud, we're able to auto disposition alerts. We can decide to take the risk and decide to shut something down and just eat that cost. Someone in the AML, in the AML side has to look at these. So a part of that is that efficiency piece that I mentioned earlier, which is if we say, for example, can not suspend, but maybe just push down and hibernate alerts underneath the same person for the time being. If this starts to hit the same profile and I see this over and over again, so it's not skewing my analyst time. Or how well, what's the individual risk on this particular type of transaction, and route that to the correct analyst with the right skill set. So robotic process automation is something that's very, very keen in that industry right now, and that's what we're starting to see, along with some link analysis and entity-based evaluations. But that's an evolutionary type of view within AML.
Yeah. Just a reminder, there is a Q&A available, so if anybody wants to come along. I'm sorry, apologies for that. I've got a postman delivering something to the
No worries. No worries.
So yeah, as I was saying, there is a Q&A, so if anybody does have any questions for either myself or Lukayn, then please go ahead and ask the questions. There is one. You mentioned cards earlier. Are you seeing a difference in the way that the card industry is using AI and machine learning to do their transaction monitoring and things like 3D Secure and all of those sort of card-based solutions versus the way that the kind of banking non-plastic digital fraud is being handled?
Yeah, they are. And I mean, I think from a historical aspect, I think this might come down to the traditional way of how they've been operated and how they've grown, right? So as a processing and issuer and acquiring world grew, they were effectively protected end to end by the means of hardware, right? And when it came down to it, and especially with the evolution of after post EMV, I would say. Now, obviously, hardware has its weaknesses. You still hear about the card skimming attacks. I woke up yesterday to find out I was purchasing gas in Virginia, at 6 o'clock in the morning with a ping. That type of stuff still happens here in the U.S. quite frequently. But for there, I would say the reliance has been mostly on evolving the consortium level modeling, really being able to tap into that global network of billions and billions of touch points and really refining. Those models have been, they're quite accurate. I would say they have the advantage too of a lot of those were built around mobile apps, over the last 5 to 10 years. So you have that ability to reach out to the consumer faster. Now, where we're starting to see the gap is in the rise in the non-card shops, so your P2P, your wallet transfers, things like that. I would say this is where we're starting to see that big disparate gap, which is those shops, even though they are technically experiencing the same frauds, have been built with 2 different mindsets. And this is where that omni-channel play starts to come in. And this is something you've heard about for quite some time, which is is my organization prepared to bring in these events as they happen and be able to make a decision before the next event happens in the space? And am I reliant on a batch-based process that I've got to wait 24 hours or 12 hours or whatever in the arrears, or am I getting that information from my native app as it's happening, or my online browsing session? And the analytics that go around this really come to, can you process those, you know, hyper granulated profiles in your agreed SLA for that particular channel? And that's the piece I think it's really starting to resonate. Is we've heard it called different terms. I mean, omni-channel has been a ubiquitous industry term for quite some time, but it comes back to me at a founding level to that orchestration. To you have a lot of this information, or I shouldn't say you have a lot of this. Most of our clients have this in some way, shape, or form, and somewhere but this one doesn't talk to this one, doesn't talk to this one. It's almost like a cascading waterfall of, I either block it or I don't, but I don't learn anything from what happened before. And that's part of where I see this industry going, is, you know, going from that pure detect stage into, we also need to prevent. We need to be more proactive and prescriptive about how we're trying to let things in our gates. Yeah.
And again, I suppose there's always this battle to get more data, and it's almost a hunger for more data, more data, more data. And, you know, there are opportunities there around things such as, you know, behavioral profiling and, you know, capturing screen grabs and all of those kinds of things to lead into your data, which is fine from a digital perspective, because there's more of a tolerance when you're buying something online, whether using a card or not, when you're accessing your bank account, when you're logging into do your tax returns. Whereas if you're in the supermarket and you've got a trolley full of food, then you just kind of want to tap and go without any delays, but also kind of the tolerance for false positives are massively different. So that whole latency to accuracy equation is quite more challenging in cards to non-card.
Absolutely, absolutely. It's a lot more of an impact to the user, right? I mean, when you move beyond the peer-to-peer, but we're talking mortgage down payments, we're talking insurance, we're talking, etc. And you know, as an industry, that's where we see, you know, the investment into ISO 222 technology and those type of schemas that will. I see the long-term drive to bridge more of this gap as an industry. Stop treating them as such different, disparate channels.
Okay, excellent. It's been fascinating chatting with you. I know we'll continue talking a lot beyond this session, but it's been a pleasure as always. So thank you to everybody who participated today. Hope you all enjoyed the conversation. I forgot you were there half the time, to be honest.
So, I just thought I've been having a chat with Gareth. Yeah.
It's always a good when that happens. So as a reminder, this session has been recorded and will be available, and you can hear the postman coming to my door again if you want to. We'll send details of how you can access the recording after this event. This is the last in the 2020 Fraud Talks series. Hope you found them interesting. We are hoping to resurrect them again in the spring of 2021, and maybe look at some other topics beyond fraud. So within the financial crime practice, we cover AML and regulatory compliance, as well as market abuse and some other topics. So rather than just me talking about fraud, we will look to expand some of the subject matter out as well. Finally, if you'd like to connect on LinkedIn, please do feel free to send me an invitation, and I'm sure Lukayn will be more than happy to accept an invitation as well. The details will be included in the follow-up. So thank you all once again, and thank you, Lukayn. It's been a pleasure.
Thank you all. Thank you for having me. Cheers.